Japan has a long and fascinating history that has shaped the country into what it is today. It began with the early communities that relied on hunting, fishing, and gathering before developing agriculture during the Jomon and Yayoi periods. As time passed, the Yamato clan established the foundation of the Japanese state, while the Buddhism influenced Japan's culture, religion, and the government. During the Nara and Heian period, literature, art, and traditional culture flourished. In the medieval period, political power shifted to the samurai and shoguns. After years of conflict, Japan was unified by Oda Nobunaga, Toyotomi Hideyoshi, and Tokugawa Ieyasu. The Edo period brought over 250 years of peace and stability, allowing the economy and traditional culture to grow. A major turning point came with the Meiji Restoration in 1868, when Japan adopted Western ideas and modernized its education, industry, and also military. After the World War II, Japan focused on rebuilding its economy and quickly became one of the world's leading industrial and technological nations. Today, Japan is well known for successfully combining its rich cultural heritage with advanced technology, making it one of the world's most developed countries. Japan is an island country located in East Asia in the northwestern Pacific Ocean. It lies east of China and the Korean Peninsula and consists of over 6,800 islands. The four main islands are Hokkaido, Honshu, Shikoku, and Kyushu, with Tokyo, the capital city, located on Honshu. Because Japan is situated on the Pacific Ring of Fire, it frequently experiences earthquakes and volcanic activity. Its strategic location has played an important role in shaping the country's culture, economy, and development. Japan has a population of around 123 million people. However, its population has been declining due to the low birth rates and longer life expectancy, resulting in one of the world's largest aging population. This has created labor shortages in key industries such as the healthcare, manufacturing, and services. To address this challenge, the Japanese government is encouraging more women and also people to join the workforce while also increasing the employment of foreign workers to help support the economy. Several major events have significantly affected Japan's economy. First, the COVID-19 pandemic caused Japan's GDP to decline by 4.21% as industries such as tourism, aviation, hospitality, and transportation were heavily disrupted. To reduce the impact, the government introduced a 25 trillion yen stimulus package. Another important event was the depreciation of the Japanese yen in 2022. The weaker yen increased import costs, leading to higher inflation and reducing consumers' purchasing power. As a result, consumer spending and economic growth slowed. Finally, the Great East Japan earthquake and tsunami in 2011 caused severe damage to infrastructure and healthcare facilities. Although recovery efforts were supported by the government and international organizations, the disaster created long-term economic and social challenges for Japan.
Assalamualaikum, my name is Nabila, and in this section I will be presenting about Japan comparative advantages. As shown on this slide, Japan is one of the world-leading industrialized economies. Although the country has limited natural resources, it remained globally competitive because of its strength in technology, innovation, and high-quality manufacturing. One of the key reasons for this success is its strong investment in research and development, or R&D, which encourages continuous innovation and technological advancement. Japan also has a highly skilled workforce known for its productivity, precision, and commitment to quality. Japan's efficient industrial production allows companies to produce high-quality products while maintaining competitiveness in the global market. These strengths have made Japan a global leader in industries such as robotics and artificial intelligence, semiconductor manufacturing equipment, automotive manufacturing, and precision engineering. Overall, Japan's comparative advantage lies in the ability to transform knowledge, technology, and innovation into long-term economic growth. Now, let's move on to Japan's main export and imports. Japan is an export-oriented economy, which means that export play an important role in driving its economic growth. As you can see on the slide, Japan's major exports include motor vehicle, automotive parts, machinery and electronical equipments, semiconductor manufacturing equipment, precision instrument, and chemical products. These products are recognized globally for their high quality in advanced technology. On the other hand, Japan imports crude oil, liquefied natural gas, coal, iron ore, food products, and electronic components because it has limited natural resources. This trade pattern shows that Japan imports essential raw materials and energy resources, then transforms them into high-quality manufactured products for export. From an international finance perspective, this helps generate foreign exchange earnings and strengthen Japan's position in global trade. Moving on to the final slide, let's look at Japan's principal trading partners. Japan maintains strong trade relationships with countries such as China, the United States, Australia, South Korea, Taiwan, Saudi Arabia, and the United Arab Emirates. China is Japan's largest trading partner, supplying industrial components while importing Japanese machinery and vehicles. The United States is one of Japan's largest export markets, especially for automobiles and technology products. Meanwhile, Australia supplies important resources like coal, iron ore, and LNG, while Saudi Arabia and the UAE are key suppliers of crude oil. South Korea and Taiwan also play an important role by supplying semiconductors and electronic components that support Japan's manufacturing industry. Overall, these strategic partnerships also help Japan secure the resources it needs while expanding its export, strengthening its competitiveness in the global economy. To conclude, Japan's success is driven by its strong innovation, advanced manufacturing, and strategic international trade relationship. Because despite having limited natural resources, it has built a highly competitive export-oriented economy and remains one of the world-leading economy powers. That concludes my presentation. I will now like to hand over the presentation to my other group member, who will continue with the next section of our presentation. Thank you and Assalamualaikum.
Today, I will explain the main types of foreign direct investment or FDI in Japan. First is greenfield investment, where foreign companies put new factories, office, or research center in Japan. Second is mergers and acquisitions, where overseas companies buy or merge with Japanese business to enter the market quickly. Third is portfolio investment, where foreign investors buy Japanese stock, bonds, or government securities for financial returns. Fourth is joint ventures, where foreign and Japanese companies work together, especially in technology, automotive, and renewable energy. Lastly, research and development. Investment focus on innovation in areas such as AI, robotics, and semiconductors. This investment helped Japan grow its economy, create jobs, and encourage innovation. Now, I will explain the regulations concerning financial operators in Japan. Japan has a transparent and well-regulated financial system. The Bank of Japan manages monetary policy and maintains financial stability, while the Financial Service Agency is supervised bank, insurance company, and securities firms. Under the Foreign Exchange and Foreign Trade Act, foreign investment is generally allowed. However, investors must give in prior notification when investing in sensitive industries such as defense, telecommunication, energy, nuclear technology, and critical infrastructure. Japan also follows strict anti-money laundering and know your customer regulation to ensure financial security. Overall, capital can move freely in and out of Japan, making it an attractive destination for international investors. Now, I will explain the currency and political risk in Japan. First, inflation risk. Japan experienced very low inflation for many years. However, from 2022 to 2025, inflation increased to around 2 to 3% due to the higher global energy and food price. although it remains lower than in many developed countries. Next is interest rate risk. The Bank of Japan maintained negative interest rate until March 2024. Since then, it has gradually raised interest rates, which may strengthen the yen but also increase borrowing costs. Exchange rate is another factor. The Japanese yen is free floating currency and its depreciation during 2022 to 2024. It benefits exporters but make imported goods more expensive. Lastly, political risk in Japan is low because the country has a stable democratic government, a strong legal and regulatory system, an independent central bank, and a low risk of civil unrest.
Hi, my name is Arfa. Firstly, I will discuss the overall performance of the Japanese yen between 2024 and 2026. The Japanese yen operates under a floating exchange rate system, which means its value is determined by market forces, specifically supply and demand, rather than being fixed by the government. Overall, the yen experienced a prolonged depreciation during this two-year period. Its weakness reflected both domestic economic conditions and global financial developments. Because the yen is a floating currency, changes in inflation, interest rates, and market expectations all influence its exchange rate. As these macroeconomic conditions change, the yen gradually lost value against the US dollar. Looking at figure 1, we can observe the movement of the yen throughout the analysis period. According to Trading Economics in 2026, the US dollar per Japanese yen exchange rate reached approximately 161.97 in June 2026, while the yen depreciated by 11.85% over the previous 12 months. This indicates that the yen remained under significant downward pressure despite the Bank of Japan gradually normalizing its monetary policy. Another important observation is the high level of exchange rate volatility. As the yen approached the psychological level of 160 yen per US dollar, market participants expected possible government intervention. Yamazaki in 2026 explains that Japanese authorities were prepared to take decisive action if excessive currency speculation continued. This demonstrates that although the yen follows a floating exchange rate system, authorities may still intervene when market volatility becomes excessive. Next, the yen's depreciation was mainly driven by changes in macroeconomic factors, particularly interest rate differences between Japan and the United States. On the domestic side, Lim in 2026 highlights that the Bank of Japan kept its policy interest rate at 0.75% during the early part of 2026, instead of raising it more aggressively. This cautious monetary policy reduced the attractiveness of Japanese financial assets. Later, Sugiyama in 2026 reported growing expectations that the Bank of Japan would eventually increase the policy rate to 1% in an effort to support the yen. Externally, the situation became even more challenging. According to portal Berita RTM in 2026, the US Federal Reserve maintained interest rates between 3.5% and 3.75% to control inflation. This created a much wider interest rate gap between the two countries. As explained by Kihara in 2026, if investors prefer higher yielding US assets, leading to capital outflows from Japan and reducing demand for the yen, which further accelerated its depreciation. To conclude, the Japanese yen experienced a sustained depreciation between 2024 and 2026, primarily due to macroeconomic factors rather than short-term market fluctuations. The main issue was the persistent interest rate differential between Japan and the United States. While the Bank of Japan adopted a gradual approach to monetary tightening, the US Federal Reserve maintained significantly higher interest rates. As a result, investors shifted their funds toward higher yielding assets, reducing demand for the yen and contributing to its prolonged weakness. Overall, this analysis shows that monetary policy decisions, interest rate differentials, and market expectations were the key drivers behind the yen's performance during the period. In conclusion, the Japanese yen is still a vital global anchor. Despite recent pressures, Japan's historic policy shifts mark a new era. Understanding the yen remains essential for managing global market risk. Thank you from us.